But first, I'd quite like to come to Caroline Grady, who's an economist at MacroHive. MacroHive is a research company that looks at some of these markets. You have a lot of hedge fund clients that you help and advise and provide research to, Caroline. Maybe you can give us, just quickly before we go to the portfolio managers, a quick macro view of what you and your investor clients, how they view Hungary at the moment.
Sure. Well, thank you very much. It's great to be here this afternoon. I think when you talk about Hungary macro, it's actually useful to rewind a little bit to the start of the year. And at that point, there was a lot of optimism that Hungary's pretty weak fundamentals would improve. I mean, you started the year with an 8% current account deficit and a 6% fiscal deficit. That's pretty large, even by emerging market standards. But the election was out of the way. We already had some pretty significant fiscal consolidation done in terms of subsidy reduction. And there was the assumption that there was sufficient political will to get the EU funds over the line. And then if you move to where we are today, I think there's uncertainty about the pace of improvement, not the direction, but the pace. Yesterday we got the budget revision. We knew it was coming for a while, so now the target is 5.2% for this year. Is it really that much of an improvement from last year? If you say there was these one-off gas purchases included in last year's deficit. And there's also been, I think, sort of a bit of sort of policy uncertainty over fiscal. We've had different messages on how the consolidation is going to come. So investors have been a bit nervous from that point of view. On the current account side, we have seen improvement because we had this big move down in oil, but obviously in the third quarter that reversed. We had this 30% increase. So there's, again, that's going to slow down the current account improvement in Hungary. And you always get the comparisons again, sort of Poland and Czech Republic, and the Polish current account is now pretty much balanced. So they're really sort of the main concerns. But if you add to that, we've had these 4 consecutive quarters of declining growth. It's not a deep recession by any means, but it's a bit of a drawn-out recession. And then on the financing side, I mean, to what Zoltán said earlier, I mean, there's just always this lack of clarity on the timing of EU funds. We had this positive announcement yesterday, the story in the FT, that 13 billion euros would come by end September. But it seemed that was a bit more related to what was going on elsewhere in Europe than really the Hungary specifics. And it's actually very hard for investors to track these super milestones and what has been achieved and what hasn't. And I think the other thing I would say is about the shift in household savings out of the banks and towards the retail deposits, whether this creates any pressure points for the banks and whether this is something that's sort of sustainable in the medium term. So I think overall it's still broadly positive. Things are still moving in the right direction. But issues over policy predictability, obviously from an investor point of view, yields are still high. The MBH seem to be talking about targeting positive real yields, which I guess we'll see that sort of by the end of the year. And we do have various improvements on the macro side that I've mentioned.
Thank you, Caroline.